Morning everybody, doing Chopper here, DRFX Forex Swing Trading. Let's take a look at the situation now taking place on the Aussie Kiwi dollar. Here we see that the pair has been in a very strong downtrend since 2011, which has led to the creation of several of these downtrend lines. Taking a closer look at what's been happening over the last couple of days, we can see that the pair ended that downtrend with a set of double bottoms that led to the break of this inner downtrend line and a sharp movement towards this outer downtrend line. Since then, we can see that the market has gradually pulled back, which generally is expected whenever hitting major barriers such as these. In pulling back, the market created this counter trend line, which is now being broken or attempted is being attempt the bulls are now attempting to break above this counter trend line and possibly break above this this outer downtrend line. If the bulls are successful and we get a break above this area here, it could lead to the continuation of this uptrend and a movement towards this outer downtrend line at the 112.16 area. This could take place over the next couple of weeks towards the middle of June. However, as with all situations on the currency market, you always have to take into consideration the bearish possibility as well. If we see a rally that takes place and creates a high above this area here, the 108.82 area, then what this would have done is it would have created an uptrend line. If when it reaches this area here, we then see the market pull back to then break this uptrend line, we would have created a set of double tops that would have led to the break of this uptrend line to resume the overall direction bearish in favor of the Kiwi dollar. So those are the two possibilities that could unfold over the next couple of days for this pair. A continued break above this counter trend line as well as this downtrend line to then carry us up to this area here for a possible move of approximately 400 pips, or a bearish U-turn that creates a set of double tops that leads to the break of this uptrend line and the movement bearish in favor of the Kiwi dollar to continue this overall downtrend that has been in place for a very long time. So that's the situation taking place. Depending on the size and the setup on the 4-hour chart that leads to the formation of that bullish daily candle, it could create a trading possibility with a stop loss at this area here. So depending on what we see at the end of the day, this could be a potential trading opportunity for us, depending on how far it closes above this downtrend line. If it closes and if it closes at this area here, then it might not be strong enough. However, if it closes at this area here, it might be strong enough to trade and carry us to this barrier here. So depending on the nature of this candle and subsequent candles over the next couple of days, that could determine how strong a signal we get to go long, or the likelihood that this breakout will eventually give way to a bearish move, to a bearish U-turn that carries us down to this area here. So let's wait first of all to see what the daily candle closes at today and take it from there. Alright, take care.